Hello, and welcome to the fourth educational moment for Pivotal Solutions Management ABCs of Investing series. My name is Dr. Lakeisha Lowe, also known as Dr. LL, and I am the CEO of Pivotal Solutions Management, which is also known as PSM for short. Before we dive into the investment term for this educational moment, I am excited to share we are officially in football season. Yes. Many football teams, whether they're NFL, college, high school, middle school, or even Pee Wee League, have had their first football game for the new season or will soon have their first football game. And with this new football season, we know that many games will be played between longtime rivals. For example, from my love of college football, I know that there is an ongoing rivalry between the University of Georgia, UGA, and the University of South Carolina. This rivalry is so intense. It's so intense. Let me tell you how intense it is. There's an event called the Border Bash that occurs before the UGA and University of South Carolina games, football game, where fans of both teams go to a designated location to enjoy themselves and trash talk, of course. And it's typically an area near the Savannah River area that is between the state of Georgia border and the state of South Carolina border. But I will be remiss not to note that UGA has other rivals also, such as the University of Alabama, University of Florida, and Georgia Tech. But did you know there's also an ongoing rivalry in the stock market? The rivalry is so strong that this educational moment marks the beginning to explain the investment terms associated with this rivalry. The investment terms associated with this rivalry are, drumroll please, the bull market versus the bear market. That's right. This educational moment represents our initial look at investment terms beginning with the letter B. To not overwhelm you, we will focus on the bull market for this educational moment. We will talk about the bear market for the next educational moment. But for today, it's all about the bull market. B is for bull market. The investment term bull market is used to describe how the stock market may be performing. For instance, when someone says there is a bull market or the stock market is bullish, what they're saying is that stock prices are trending up or rising consistently. Specifically, a bull market occurs when a leading stock market index, such as the S&P 500 or the Dow Jones Industrial Average, rises up at least 20% or more for 2 months or longer. Now, I'm not going to go in the weeds, but I will explain. A stock market index such as the S&P 500 and the Dow Jones Industrial Average is basically a group of stocks that an investor may use to determine how well their investment portfolio is performing. And they use those index as benchmarks. So what they'll do, they'll compare the percentage return of their investment to the percentage return of the stock market index. They will see if it's performing better than the stock market index at the same pace or below the performance of the stock market index. Now let's get back on track about the bull market. Other indicators associated with a bull market may include one, a decreasing unemployment rate, which means more people are working and companies are hiring. Two, higher liquidity and trading volume in the stock market, which means investors have an easier time buying and selling investments due to the high demands of investments. Three, a greater sense of faith and confidence in the stock market among investors. 4, low interest rates to make it less expensive for businesses to borrow money. And 5, a greater number of private companies becoming new public companies, or as I like to call it, new kids on the block, which is similar to the singing group back in the day where they would sing, oh, 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 oh. Right stuff. I know. I'm telling my age, but it's all good. Good. But these new public companies are commonly known as IPOs or initial public offerings. Example of the longest bull market that has occurred in history took place after the 2008 Great Recession, and it occurred from March 2009 to March 2020 at the onset of the pandemic. During this 11-year bull market, the S&P 500 rose by 400%, and it grew by more than $18 trillion in value, according to the Business Insider. Let me repeat that again. It grew by more than $18 trillion in value, according to the Business Insider. The Dow Jones Industrial also had a record breaking where it went up by 29,551 points. Now, other examples of bull markets that have occurred took place in the 1920s, 1980s, and from the early 1990s to the early 2000s. Overall, a bull market is where investors feel comfortable about leaving their money in the stock market because of the hope that because of the stock prices going up, they can make a profit. Now, although most people gravitate to the bull market, it will not be fair for me. It will be unfair for me not to school you on the bear market and what it entails. So, to get insight on the bear market, I encourage you to follow Pivotal Solutions Management Facebook, Instagram, and LinkedIn pages to receive a notification when the next episode in the ABCs of Investing series will occur. And if you have found this educational moment, as well as past educational moments, helpful, please click on the like button or leave a comment. Your insight and your feedback are certainly appreciated and valued. As always, I'm yours truly, Dr. Lakeisha Lowe, also known as Dr. LL, and I'm with Pivotal Solutions Management. I encourage you to stay motivated, determined, driven, and prayerful with everything that you do. I encourage you also to enjoy the rest of your day and remember that financial literacy can change the outlook of your family, future generations, and you. My hope is that you have a great day, and I wish God's blessings upon you.